Hey, everyone, it's Rayce Robinson, your favorite Florida mortgage broker. Another interesting week. CPI last week, craziness with the banks. Now we have the federal funds decision coming on this Wednesday at 2 o'clock. Let's jump in here. Rates have dropped almost a 0.5% over the last couple weeks. This is Mortgage News Daily. This gives a general idea. Remember, everyone's rate is different. This is the Fed funds rate that the Fed is going to be announcing on Wednesday. What they're doing, you can see how high it's been. It's been up to like 18%. Right now, the Fed funds rate, I think it's around 4.5%. Remember, it's kind of a range. And they're likely to raise the Fed funds rate a quarter. We're going to talk about that. I overlaid interest rates to the Fed funds rate. Remember, the Fed doesn't actually control interest rates. They control the Fed funds rate. But if you look here, here's something that's really interesting. At the beginning of January of 2022, rates were 3%. Flash forward where we raised the Fed funds rate 1%, interest rates went over 5%. Why is that? It's because the market is pricing in where the Fed funds rate is going, not where, not any particular increase that the Fed does. So when they raised the Fed funds rate 1%, the market knew the Fed was going to go on this big run of raising rates to get in front of inflation, trying to slow the market down, which they successfully did. I actually shortened this video. This is my second take because I got way into the weeds on the economics. Here's what we should know, because it really matters what we do with this information, not the economics of all the ins and the outs of what's going on with rent and rent equivalency and oil and all these things. Here's what's going on. So goes inflation, so goes interest rates. So goes interest rates, so goes the market, as far as how many buyers are going to be pushed into the market. Inflation is coming down, 100%. Don't get your financial advice from me, but if you look at all the numbers, all the averages, you look at unemployment, you look at oil, rent, all of these things, that number's coming down. Inflation is going to continue to come down, has been coming down. The market believes inflation is going to be lower. The market believes we're likely to be in a recession, which also helps rates. And so I think rates will be under 6% faster than what most people think. Some people, and I'm starting to get in this camp, rates could be closer to 5.5% to 5% by the end of this year or beginning of next year. And so that's where the puck is going, as Wayne Gretzky says, be where the puck is going, not where it's at. I think rates are going to be lower. That's going to push more people in the market. Is that a good thing? Is that a bad thing? It's just a thing, because rates being lower mean even with limited supply, that's going to push more people into the market. It's going to make it more competitive. Are sellers going to start putting their houses on the market? I don't know, because a lateral move with higher rates is harder for them to justify, but there is a lot of equity, that a lot of people have in their homes. And so I don't predict any major price declines, especially here in Florida. It'll be interesting to see what rates would need to be to get sellers to come back and start really listing their homes to keep up with the demand that's likely to happen if rates fall. So what do you do with this information if you know transactions are going to be down closer to 4 million this year, down from over 6.5 million, and at the same time you see this market improving as far as rates go, which are going to push more people to want to buy a home? The answer is simple. It's going to be that skills are going to matter again. If you're, I don't know, I use the fishing analogy. Let me use a hunting analogy. If you're hunting in the woods and there's way less game that you're hunting, you're going to have to be a better shot. You're going to have to pay attention to being a better hunter when there's less people hunting, especially if there's a lot of other people hunting at the same time you are. I don't know about the analogies, but hopefully that makes sense, that there is less to get and the same amount of people trying to get it. You gotta have better skills. That goes for us and that goes for real estate agents. Better listing presentations, better marketing. If I put a gun to your head and said, go get a listing today or I'm going to pull the trigger, you would do it. Whatever the answer is what you would go to do. Maybe you'd say, well, I'd go knock on doors all day if it meant my life, and I would go find somebody that wants to list their house or that wants to buy a house. Whatever the answer to that question is, gives you a good idea of what are things that have a high return on investment. A lot of people are spending their times doing things that have a low return on investment, and those are things that you can do to build a brand, but they're probably not going to be as effective making sure you have a paycheck in a market that's going to have less transactions. So know what your high ROI items are that you can be doing. And I ask agents all the time, what does a perfect week look like? If I said, what did you do last week? And how do I know it was a successful week, as far as not necessarily how many listings or sales you got, but what are the activities you did that you'd say, hey, these were good activities that are leading to me that stay in the real estate business in a year that's likely to be more trying, where we're actually going to head back into a more normal market as rates fall. Same thing with lending. You need to expect more from your lender. And I'm obviously in lending saying this, but so many people call me and say, what programs do you have? Here's the answer. Every lender almost has all the same programs. I bought a building that I moved my mortgage company into. I did not ask the contractor what saw and hammer he was going to use. It's how he uses those that matter. The better questions are, how do I know your pre-approvals are real? What are you doing when I send you a client that's not ready to buy right now, or maybe they don't have credit, to get them ready to buy? How are you tracking that information? How are you making sure I get paid on every possible deal this year? If I give you a client that you're pre-approving, that not only do you have the saw and the hammer, but you know how to use that saw and hammer to make sure I'm getting paid on every possible deal. Skills matter in lending again. They didn't in the last few years. It was all about speed. Real estate was all about speed. Now it's back to skills matter. You need to have a higher expectation on communication from your lender, how they handle your clients, and how they just support you. What you're doing, first-time home buyer seminars, whatever the things that you're doing, you should be looking to partner with good people to grow your business, because that's what it's going to take this year to be successful. At least that's my opinion. Build better relationships. Skills matter again. It doesn't matter what the Fed does in the short term. Rates are going to improve. This is going to be a great market. We're in Florida, one of the top places to be in real estate. Keep your boat on the water. Keep fishing. Get better at fishing. And if you have any questions on this or anything else, reach out to me. I'll keep letting you know what's going on in the market. And as things move, we'll kind of keep talking about that. And I will say, on the bank failure front, what's likely to happen on that, you could see banks tighten up guidelines. They're all getting easier for first-time home buyers because that's the push. But you're likely to see, for investors and second homes, guidelines tighten up on those. That has already started to happen. And so we'll kind of see how all of this plays out as the year goes on. Anyways, have a great day. Let me know what I can do to help. I'll talk to you soon. Bye-bye.